Welcome back. You are still with us on Markets Today this evening. Let's get to the rest of the headlines that we're tracking for you. The fourth headline this evening, the auto index gained close to 2% on the back of strong demand expectations. Eicher Motors surged over 3% after a CLSA report that maintains a buy rating on the stock. Eicher Motors is their top bet in the auto space. Sonia's here with more.
Well, thanks a lot for that. Eicher Motors was clearly the stock of the day after it hit a fresh 52-week high and has gained over 35% in 2022 already. In fact, in the month of August alone, the stock is up about 12% and a lot of brokerages are quite bullish on the stock. CLSA put out a note today where they said that Eicher Motors is the top pick in the auto space and they have raised their target price to 4,154. They say that most Royal Enfield customers do come back and replace their old vehicle with a new one after a 7 to 8 year lifespan, and they believe that 80 to 90% of this fresh demand could be enjoyed by Royal Enfield once again, which would lead to higher revenues. Not just that, exports are a huge growth area for them, and the EBITDA per vehicle is expected to improve significantly because of the falling raw material prices. Currently, the EBITDA per vehicle for a Royal Enfield bike stands at 42,000 rupees. It's expected to rise to 46,500 rupees on account of lower commodity prices and better operating leverage. It was clearly one of the stocks of the day, hitting a fresh 52-week high.
Okay, all right, Sonia, thanks very much for that. Well, on to the fifth story then. Sterling and Wilson surged over 4% after the company won a 2,200 crore NTPC order. Nigel is here with more details on this story.
Well, that's right. Sterling and Wilson, they won an order worth nearly around 2,200 crore rupees odd. Remember, they have been declared as L1 bidder for the BOS package. Now, that compromises of 4 blocks of the proposed solar PV plant of NTPC. And keep in mind, this project is in Gujarat. So on the back of this order win, well, Sterling and Wilson bounced up in trade. Back to you.
Okay, all right, Nigel. Thanks very much for that. Well, the other two stocks which I'm tracking today is that Lupin, which gained almost 2% after Nomura report maintained its buy rating on the stock. However, Gland Pharma ended lower by around 0.5% despite a buy rating from Goldman Sachs. So more details on that then. Nomura on Lupin, they maintain their buy with the target which is cut to around 863 rupees. The stock, according to them, factors in current stress and a high contribution from India as well as growth markets provide downside support. Revenue growth will be a key driver for margins going forward. Continued tight leash on overhead costs will drive margins. The company has, Nomura has cut their target multiple, reflecting headwinds in the US business. But moving on, for Gland Pharma, it was in focus because Goldman Sachs has initiated with a buy and a target of 2,830. It's a leading global generic injectable player, addressable generic market size of $138 billion by FY27 estimated. They expect a rebound in FY24, modeling 27% top-line growth, a pickup in the rest of the world as well as India sales, improvement in US and core markets to double-digit growth, and increasing production capacities and utilizations at key facilities are a couple of key points which will help in terms of driving growth going forward. But staying with the entire pharmaceutical space, here's a CNBC-TV18 exclusive. Drug maker Cipla has big plans for its business, which include doubling its revenue from its India and US markets over the next 5 years. A large portion of this expansion will come from its wellness business, which has seen some good traction across customer categories. MD and global CEO Umang Vohra says the plan is to use both acquisitions and new product launches to grow the business fivefold into a 3,000 crore business over the next 5 years. He also said that the company will work on deepening the India and US markets through innovation and entering new areas.
What we're seeing in India is incredible amounts of deepening of the healthcare market into tier 2 and 6 towns. We are seeing a wave towards wellness markets across the world. So that will be growth driver number 1 for us, which is just the deepening of the presence of healthcare in India and the evolving consumer healthcare space.
Let me start by addressing the wellness segment that you spoke of. And as you pointed out, you have aspirations of building that out even further. How much of that is going to be driven inorganically? Is that an active discussion that you're having with potential players at this point in time? And what would the size be of that business, and what kind of investments do you hope to make within that space?
So we have very large organic brands in the wellness space, and our objective would be to grow and deepen these organically first. Of course, inorganic is a part of the strategy. But I think if you look at just the depth of our organic brands, we have several brands which are 200 odd crores big. The total business right now is about 600 crores. We can see this business growing on the health side itself to close to about 2,500, 3,000 crores over the next 5 years. So we are very bullish about consumer wellness. I think this is a business that will require us to be a lot more D2C oriented as well, in addition to creating equity for these brands with doctors and with patients. So we have large number of brands in the pain space. We have a large franchise in the vitamin space. We are the leaders in the nicotine replacement therapy. And over a period of time, we will create more brands in the cough segment. We will create more brands in the mom and children segment. And I think we feel very bullish about this category in India.
Okay, all right. Well, let's get to another exclusive then. Sources are telling us that Rare Enterprises-backed company IKS Health will file its DRHP with SEBI next month. Yash Jain is here with the details.
Well, that's correct. So just last month, Rare Enterprises backed another company, Concord Biotech, filed its DRHP with market regulator SEBI. And now there is another new company, which is again Rare Enterprises backed, which is IKS Health. And sources tell us that the company is preparing the documents, and is expected to file the IPO DRHP with SEBI as early as next month, that is in the month of September. As far as the IPO for IKS Health is concerned, it is expected to be a complete offer for sale issue. There is going to be no fresh issuance of equity, which means the stake sold by selling shareholders and the funds raised will be taken by the selling shareholders, and nothing is expected to come into the company. As far as the size is concerned, according to our sources, 2,500 crore is expected to be the size of that IPO, with issuance of about 15% equity. The IPO is expected to value IKS Health at about 16 to 18,000 crore rupees. That is what our sources are indicating at this point of time. The IPO is expected to be launched only next year in the first month itself, about January 2023. Now, Rare Enterprises, which is essentially a promoter of the company, owns about 54% stake. Utpal Seth, who's the MD and CEO of Rare Enterprises, is a director on IKS Health, as well as Amit Goyla, the head of research and investment at Rare Enterprises, is also a director with IKS Health.
Okay, all right, Yash, thanks very much for that. And on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.